mentioned herein. The speakers or staff may have positions in some of these stocks. Okay, so now back to the title, KLSE Market Outlook and Stocks to Watch. Okay, now, yes, as usual, I'm sure some of you have been wondering what is kangaroo and all that, because in the financial world, the terms that we know are just bulls and bears.
Yeah.
Okay, so what is kangaroo? Well, today you can hear it from the man himself, okay, to know about the kangaroo market. Right, so I would like to ask you how the market has been, but first let me go through quickly the market prep for today. So this is for 3rd of August up to 12:30 p.m. during the lunchtime. So far we have 264 gainers, and we also have 400 losers. Okay, and then for the turnover for me, now it's 12:30. But we have less than 1 billion. Yes, it's quite low. I can say market is still, we can say, taking a rest, given that they have been making gains for a few days consecutively.
Yeah.
So this kind of correction is a healthy one. Okay, nothing out of the ordinary. Okay, then as a result, yes, KLCI so far is just down by 8.35 points.
Yeah.
Okay, so to our quick market outlook, okay, not so quick, but we're going to go through quite detailed. All right, so we're going to start off with the KLCI, and this is the one which I want to ask Sifu Fred how he views the KLCI. Mr. Fred?
Yeah, hi. Hi, guys. First of all, on behalf of F1 Academy, let me thank you all for attending this preview and also this talk, this seminar. Thank you very much for that, and thank you for giving me the honor and the privilege to share with you my opinion about our market. Okay, so let's talk about the market. If you ask me where the market has been, I think the market has actually been terrible to tell you the truth. And let's start from the May high, which is, and around that time, if you do remember, it's 1615. But immediately after that, it just continued to plunge. In 2 months, it plunged about right down to 1407, about 200 over points, and to a low of 1408 around 14th of July. And so really, I don't know if you remember these 2 months. Can you make any money from the markets? It's a waterfall kind of a market. Just keeps going down and down and down like that. And if you look at the chart, I think you will understand what I'm saying. You see all the arrows there? Arrow down, arrow down, arrow down, arrow down, arrow down. See, the TAD arrows are all down. And you cannot make money in a downtrend. And until the market is so bad, we just shake our head. There's nothing. When will we ever go up? That kind of thing. And so we went to hit a 27 month, which is a 2 year and 3 months of downtrend, right? So we are so used to this downtrend. If you ask me, that when the market make a U-turn, it make a U-turn. In July the 14th, from July 14th right up to August right now, which is about 2 weeks of uptrend. We are so used to the downtrend that we never believed that this uptrend can last. And I don't know how many of you went in. I look at the CI and I said the market make a U-turn. But because we are so used to the downtrend, we didn't really. How many of you actually participated in this uptrend? If you did, fantastic. You definitely are not looking at the news, because the news are all bearish, very negative news and all and so on and so forth. And even with this Taiwan and thing and the China thing is also very bearish. But yet, unless you must be based on technicals, then you would have bought some stocks on this way up. And that brings us up to where we are today. And we hit the 1500 resistance, really is a round number kind of thing, right? So from 1408 to 1500, we're talking about 100 points rally. Look, this rally really, we're so used to a bear market that when we have a rebound, we don't believe in it. No? It's like, we've been there so long. So how can, we are turkeys already in a way, How can we fly like an eagle? So the thing is, we must learn to fly like an eagle again. And that means we must know that the trend has changed. In other words, I mean, you're a fisherman, right? So where do you best fish? When the tide is low or tide is high?
Okay. Well, for inshore fishing, meaning you're fishing from the beach, one of the best times is actually to start fishing when the high tide starts to come in. Yeah, starts to come in. All right. So similarly to trading, you want to catch the trend early.
So are we, to me, okay, in terms of technicals, because we are making higher high and high low. So to me, the low tide is temporary over, at least, due to a technical principle of high low. Okay, just for sharing purposes, right? That's how we detect, and there are tech stocks especially that are in this kind of patterns. Right, that's why we feel that the tide has started to change slowly to be bullish tide, right? Bullish tide. So what are the sectors into that are turning bullish? Now we got a turtle, atom, and ducks. That the green arrow can if you can see the green arrow right down here, yeah, correct. TAD breakout. See this green stretch is the stretch is telling us that the tide. So the arrows are the tide. Just imagine. And the tide has changed. It's changing, sorry. Green, you see the green and the green and green. Now, later on, Afnan is going to show you other subsectors. And you can see them changing. Now, just for your sharing purposes, it was so bad that there was zero the last 2 months. There was zero sectors going up. I mean, zero. Now, if you are a contrarian trader, when they are too extreme, either way, then we have a turning point. That's how that's what Warren Buffett does. He said buy when everybody is fearful and sell when everybody is greedy. So that's being a contrarian, and being a contrarian right now, see, the arrows are telling you to be a contrarian, giving you the confidence to be a contrarian. So later on, we're going to flip and look at the other sub-sectors and see whether they get arrows. Just for your information, very quickly, I'm done already, nearly done. There are 13 sub-sectors, right? I've done 8 sub-sectors have turned bullish. Can you imagine when 2 weeks ago, there were 0 sectors bullish? Now we got 8 sectors bullish. 5 are still yet to be bullish. What are the 5? They are yet to be bullish. They are a little bit bullish, but not as good. They are energy, they are transport, they are properties, they are plantation, and they are healthcare. These 5 subsectors have still a bit slow, but the others, they have turned, the tide has turned. So yes, that's the good news. Okay? Yeah. So now, but many of us here are not in the KLCI. Well, I'm in the KLCI. Banking stock, for example, right, are good. Right? But for those who are in mid and small cap, let's look at the next index. And I'll pass it over to you. Okay, how you analyze the mid cap and the small cap index.
Okay. Well, just to continue from Mr. Fred's view on the KLCI, right? The FPMM SCAP is not as strong as the KLCI, but in terms of recent momentum, okay, there is one. You see here, overall trend still down based on lower highs, lower lows. Yes, it is still true. You can also see based on this trend line, okay, the index is still below it. There's no breakout above the trend line yet. Okay, so
but there is a higher high though. If you can show, yes, that's the higher high. So that's telling us that the tide, is changing.
Yes, but now what we need is a higher low. We need that support.
Okay, fair enough. So at 1480, which is on the CI, right now it's 148 something. If it doesn't go below that, it's going to make then makes a U-turn. Then it continues the uptrend.
All right, and then yes, that is true. So another thing is, you notice that there is a recent up gap support, all right, highlighted by this bright green rectangle here. Okay, so an up gap in the market is a sign of strength. Yes, it can act as a support. And if we zoom in, we can see this is today's index as of 12:30. Okay, the index is still above the gap,
down gap, the up gap,
right?
Which is fantastic.
So this is a good sign, saying
Good
that
sign.
right, the gap support is still intact, right? It's not broken that. And then what's more is right now it's just a doji, so it's an equal battle between the bulls and the bears.
Yeah, if I may ask, I don't know, for the sake of some audience, who doesn't know about gaps, what does a gap signify? In this case, an up gap. It signifies, you already wrote that strength, huh?
Strength in the market.
A lot of buyers are coming in, right? I mean, from looking at the chart.
Then other than that also, why I say there's momentum recently, if you look at the RSI, previously it was below 30. Below 30 is oversold.
All right.
So when it rises to above 30,
it's fantastic. Very correct, right? Yeah.
And then what's even better is if it crosses above 50, technically RSI interprets it as bullish. Above 50 is bullish, below 50 is bearish. Okay. It's a momentum oscillator that interprets the market this way.
Right.
But of course, we also look at other factors like
the moving average.
The moving average
just
is
a bit
still below the 50 EMA. Okay.
Yeah. Look for the cross.
Although there's based on our system, there are already two arrows from the atom and turtle indicator. Okay. So the last one, the duck. Right. And of course, the 50 EMA. Okay, it's just, I think it's a matter of time.
Yeah.
All right.
What is the duck, by the way? I mean, and also the atom. I mean, it's okay if we. Because these are indicators not designed by me. Actually, designed by inventors like Bollinger Bands. For the atom, it's a Bollinger Band by John Bollinger, and so he is the designer. And as well, the ducks are actually basically moving averages. So and moving averages are designed by people in the 1910, 1900s. So yeah. So basically, it's the combination of these three that is important.
And hence, you have a trend following system. Okay, the TAD. All right. So yes, FPMMSCAP consists of a lot of mid and small cap stocks. So generally, this is how they're doing. All right. Recently, there's been momentum, but if you're talking about the past few days, okay, there has been some profit taking. Only because last week there has been some rallies, right? It's a normal correction for me.
Right. Okay. The last 2 weeks, it's been good. It's great.
So other than these two indices,
what about the sub indexes?
All right. So we can start off with technology. So technology, maybe you want to share a bit how you view it.
Oh yeah, based on the concept of principle of higher high and higher low. We're talking about the tide changing from a low tide to now beginning of the tide coming in. So when the tide comes in, you notice when the tide comes in, goes, it pushes itself a bit higher, but they do have a wave that is being pulled back, right? And but if it is a high tide, then the next wave will be higher than the previous wave. You got a higher high, but then there are also pullbacks. As long as the pullback, the dips, have a higher low that is higher than the previous low. So you have a high and a higher high and a higher low. You have the tide changing into an uptrend. So in this example, okay, you see a wave coming down, but actually the tide, which is the tide, is now showing that it is making a high high. Now, if you look back, when have we seen a high tide? Nothing. All the way from to the beginning of 1615, which is right. It came down all the way. There is no high tide. So look, the light is at the end of the tunnel. We see some light. Yeah, from based on just looking at the chart. That's how the charts can be so revealing if we know how to interpret them. So, in short, it crossed the 50 moving average, Afnan. So, I mean, that's already bullish, making a high, 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 low. RSI is above, although you didn't put RSI. Okay, so it's already above. So technology is definitely a sector that is now turning in terms of the tide wise. It's turning around. So That's the sector. And talking about sectors, Dan Sanger, in this book, chart pattern analysis, Dan Sanger is saying that the secret, one of the secret in making money from market is you must buy a stock that belong to a strong sector. The strong sector. So which is a strong sector? There are 13 sectors altogether in our KLSE. So which is the strong? This one, the one that crosses the 50-moving average, the one with green arrows. So that's how our green arrows here can help to detect that the tide is coming in. Okay. So technology is Afnan, we see the green arrow there?
Yep, there's the green arrow there. It's starting from 28 July. All right. And before this 3 green arrows even showed up, let's look at other technical aspects of it. Okay, indicating momentum. So based on this trend line, right, if you connect high to high, there was the breakout here. Not just that, also an up gap. Okay, around the time where the breakout occurred. Remember, up gap is a sign of strength. All right, and then around this level here, roughly 63 points. Okay, you can also view it as the resistance turns support.
Support and resistance turns support.
Yeah, so it's at the moment, it's an important key level to monitor, all right? So the index may bounce on the support and then go up or violate, okay? So we'll just look at the charts, see what happens, react accordingly.
And
that's why,
no need to forecast.
That's why it's very important to know how to read charts.
Yes.
Okay. So other than this,
you didn't put an RSI. Maybe you'd like to show what would the RSI, relative strength index, for those of you who are not sure what it is. Now, of course, we teach this in our courses, in our classes and all that. But let's just look at anything above 50 on RSI, it's considered bullish. So what is it now, Afnan? Is it above 50?
Yes.
65, 55.
It's 58.
Yeah, that is above 50. So that's a good sign.
It's a good time that currently for shorter term, yes, there is bullish momentum in the technology index.
Okay. Right. What about the next one?
Other than that, also sometime this week I saw some small rotation play in the market. Consumer products also were staging breakouts. Okay, but of course not as strong as the technology stocks and index.
That one broke through the downtrend line. This one hasn't yet broke through the downtrend line, but it's above the 50.
Yes, and not just that, the 3 green arrows are there.
Yes.
Okay, so that's the important one.
That telling us that the tide is changed, The tide is changed.
Okay, and then not just that, if we look at it from a bigger picture, all right, you can see that it is currently around the 50% Fibonacci retracement. This is a very, very long-term view, right? If you look at it this way.
It's supported at the 50.
Yes, correct.
People.
Okay, so if we look closer, it's it's around that level. And if there is a form of a breakout above the support, then it will be a good sign. All right. Now, but I do see that it's struggling to break above the 200 EMA.
The other thing is this rally is actually very rapid. So that's why they are in a way we also should be careful because it's prone to a correction also. But so far so good. So far so good. I mean, the fundamentals are really bad. You got Pelosi going to Taiwan, and then the Chinese are threatening to encircle the whole of Taiwan and all that.
Fundamentals, a lot happening.
Yeah, the fundamentals are really bad. You look at fundamentals, you would have dumb. But then again, you look at the charts. The charts are telling you that the buyers are still there. The sellers are not panicking as what people say. Now what we do is, there's a lot of panic talk outside there. We double check. What does the chart say? No, I don't see any panic. So you see, I shouldn't panic because the chart tells me not to panic.
A bit of profit taking, yes, but panic, sharp drop.
No. We don't see. Nothing at all. So when it comes to the kangaroo market, we talk later. You can actually benefit from that in a pullback.
I think we can look at another index as well. So other than the consumer index, we also saw some movement in the industrial products and services. Okay, but this one is quite a sharp rally. Okay, recently. Okay, now it's taking a pause.
Yeah.
And if you were to draw a very steep trend line like this, yes, there was a breakout. Around the time where, I missed this one, there was an up gap over here.
Maybe you would like to,
Yes.
magnify this chart. That's a lovely V. It's so steep the drop. So now also the steep the rise. This is something exactly like in 2020, isn't it? When this way. And the V can continue to go up to the top of the V. That's the beauty, which is around the 200 level, 250, 200 level over there,
And then other than that, the up gap, the 3 green arrows, okay, we can use RSI also, all right? So before the breakout of the trend line, Mr. Fred, if you see RSI from below 30, okay, it rose above 30 and now it's above 50.
Those of you who know how to use the RSI will know that the 30 is an oversold, right? And therefore, an area for aggressive traders to go in. Aggressive. If you're conservative, better wait for 50 or higher, which it is right now.
Yes.
And you look at the volume. The volume is higher as it goes up over here.
Yes.
The green color. Yeah,
so during the rally, it was rising. Now it's resting, right? Okay.
So the Dow theory says.
Yeah.
What is the Dow theory?
Okay. So basically,
price and volume.
The price and volume relationship. If price is rallying, volume is high, it is a strong rally.
Yeah.
Okay. So if price is rising but low volume, it's a weak rally.
Weak rally. But it's a strong.
Yeah. So right now we see volume is high. Oh, not just that, Mr. Fred. Fibonacci, okay, retracement. If we draw it the other way, we can estimate the rebound levels. Right now, it is testing the 38.2%.
So it stopped there for a little while. Yeah,
Yes.
it might just stop there for a little while, but that's fine. It's too sharp to But the next one, if we can break through 38, that will be 50. That will be that will be just nice. The next support and resistance.
Yes, around this level, right? Okay.
That will be the next resistance.
Yes, and then if price does retrace, all right, temporarily, the nearest support I can see here is the up gap, right, over here.
Yes.
Okay, this is around 178. So do monitor this level as well. Then we'll see what happens next.
Yeah, you can also use the FIFO retracement to measure the pullback, which maybe landing around the green area actually.
Yeah, around like this also can, but it's quite a small range. Still hard to see. Never mind, let's just extend it outward.
Yeah.
Oh, it coincides with the 38.2%.
All right,
okay.
Right. So even if it comes down to the, it's still bullish. It's still considered bullish. It's just only a correction, profit taking. Look at the volumes are so small.
Yes.
Okay.
Next one. I think the rest of the indices will just go through quickly.
Yeah.
Okay.
Quickly. Yeah.
So the ones that we saw, there's TAD, 3 green arrows. One of them is construction. Okay, let's see. 3 green arrows.
Yeah.
Okay, although it's not as strong as the first 3.
Yes.
Okay, still momentum is coming back in.
So if you pull back up again, Afnan, and on construction, just to prove that the type can be interpreted by the arrows. You go back 2 months ago, which is around that. You see how the down arrows start to come out all the way down. So if you have this chart, the arrows would have pointed out and told you that, look, the tide is a low tide now. Stay out. So the arrows are there. You see, and you can see that it's just so timely that it fell all the way down to June, and then July, and we only got an up arrow around July the 22nd. You see, which is when the tide is actually turning. And so fantastic, this arrows system. Yeah.
Okay. And then other than the construction, we have financial services. Okay. Recently, yes, there's been momentum based on the indicators, all right? And it tested nicely the 200 EMA.
Right.
But if you're talking about from this, in this perspective, all right? In this sense, it is overall sideways, okay, with a bullish bias. All right, so if it breaks up above this level, around 17085, okay, it can turn to be more bullish. Okay, so that's on the financial services. Next one we have, yes, telecommunication just started. All right, the arrows, the signals were on the 28th of July. Okay, so we can expect
again
some,
high tide. Yeah, it's the beginning of a tide change.
Yes. Okay. Next we have utilities. Okay. Not so strong, but technically based on the arrows, yes, there is recent momentum. Right.
And then W bottom and all that. So these are all indications of a tide change.
And also, yes, that's a good one, Mr. Fred. W bottom. Okay, so I missed that one actually. Okay. So you see here, the index was down, trending all the way here. Then it starts to form a W. Okay, in chart pattern analysis, this is what we call double bottom, right? A bullish reversal chart pattern.
Right.
So maybe you want to explain a bit what a double bottom is?
W bottom?
W bottom, yes.
Well, basically it's the market coming down and testing a low twice, So you got sellers, very aggressive in the first instance, but because they have, probably over dump, over panic. And so they cause a selling climax, which is over here, and you see the high volume, and then the market makes a U-turn, okay, because you have over panic. So the over panic will cause a low, and the rally after a certain distance, again it came back down and retest the lows. That's how you get a double bottom. And a double bottom means that it's the second round of selling failed to exceed the low of the first. That means there is strong support around the lows. That's what it means, right? And you see, within the double bottom, there is a smaller W here, and that's where the trigger comes in, right? It's telling you, if you can draw a resistance line just above this small W. So within a W, there's a W. So you have a W within a W. And look, and based on that, see where the arrow is telling you nicely, there is a bullish signal there. Bullish signal there? Yeah, around where the arrow is. That's right. 3 arrows are pointing up. Pound, you already, can confirm the bottom. Okay, so beautiful example of double bottoms and double tops. So there are double tops there as well, M tops and all that. And these are W bottom, or also called a double bottom.
That's a nice analysis on chart patterns. Okay, last
one.
Oh
yeah, that's right. Yeah. And that's a book that I've written about. And you can refer to this book. Yeah.
Okay, and last one we have here, red. I don't think many people like to touch this, but
it's fantastic. It's doing well. Yeah. Look at that. It's above the 50, above the 2050.
And then what we meant when we say high, low is something like this. Okay. So we want a low, a high here, a low that's higher than the previous low, and then a newer high. So this index is on the way there.
Yeah.
All right.
Yeah.
So on the sectoral indices, yes, that is it. So that's our outlook.
Okay.
So we go back to the slides. Okay.
What about healthcare? I mean,
healthcare is
maybe we took it there. One more look at one. I know healthcare is no good, but to show that it's still lacking in buying. I mean, because we are showing you all the type change from down to up. But what about those the index and sub-index that is still waterfall?
So healthcare, hold on. All right.
Healthcare is you can see a laggard. There you go. It's still a waterfall kind of. I mean, sad to say, because it was once a darling of our investors.
Yes, during this period,
during that period, right? And this example shows that you see green, that's the high tide. Red is the low tide. So if you just follow the arrows, it would have got you out of trouble. Okay, got you in at the right time and got you out at the right time. Right now, there's a wee bit of a buying. Okay, so yes, those of us who are still in these healthcare stocks, okay, well, we could be seeing the beginning, the end already. The end of the down, and the market is making a U-turn already. But it has to do a bit more. But at least what it's saying is the what you call leakage is already is stopping now. Right now, the duck don't have the arrow yet, right? But it's good, just about the blue. If the index crosses the blue line, then you have already 3 green arrows. So not too bad the news line for healthcare, people who are in the healthcare sector. Yeah.
Okay, so I think we can go back to the slides.
Oh, yes.
All right. So that's on our market outlook. And you see here how in an overall downtrend, there can be rebounds in between, shorter term bullish momentum, all that. Sometimes they last throughout the day. Sometimes they don't. They can come down back quickly. So what do you call that? Mr. Fred, maybe explain this.
Yeah, this kind of market that we see, so often nowadays. I call them kangaroo market, and that is, see, early morning they will bounce, right, and then after that they will come back down again. So it's very frustrating. You go and buy, and then you're not fast enough, and you didn't sell it in time. You see, you make no money, right? And because it is a kangaroo market, and we see so many instances of kangaroo, even now when the tide has changed to down to up, we see bounces like that don't last. Sometimes it lasts, which is good, right? But you see, what about when it goes down and comes down again? Do you take a position? Do you exit your position fast enough before it comes back down? Okay, now we got a technique that can help you to do that, exactly that. To get in when it is going up, but when it's coming down, we can sense it, right, through the technical, and then get you out before it comes back down, like this example. And so when you buy low and sell high, you make money. I mean, it's simple as that. You buy, and you're not fast enough. It comes back down, back to square one, and you don't make no money. And worst thing is if they continue to go down and drop further and drop further and drop further. And then you see some stocks are like that, right? Waterfall kind of thing. So not only you make no money, you will lose money. So important thing is to know where to cut your losses when you're wrong. But most importantly, to go in at the right time and you get out at the right time. And so we call this kangaroo market, and the stocks that display this, and we can detect that every day. Okay, we have a method to detect that. What are the kangaroo stocks that are going up? And before they come down, pop out. And then again, they hop again. Sometimes within the same day, 2-3 times they hop. And then we will know that they are hopping. And then we are going back in again. And then they make a ghost turn again, a U-turn, and we get out again. Isn't that nice? We do it so many times a day. So instead of nothing wrong with buying and hold. I mean, I'm a swing trader as well. I buy and hold some of my stocks. But some of my stocks, I also use it as what we call intraday or scalping.
Yes.
Some of these are some of the words.
I was just about to say, actually, so those who are familiar with these trading terms, what you see here is actually scalping. And a lot of people, when we talk about scalping, they only say, oh, scalping is only for volatile market like Forex, all that.
Yeah.
Malaysia market,
dangerous and all that. Yeah,
I do think to some extent that Malaysia market is slow, but still doesn't mean you cannot scalp. You just need the right method, the right routine.
Correct. Even in a downtrend, in a bear market, you can scalp.
So I think this is where we show them what kind of stocks that
behaving like that.
Yes.
Yeah.
So scalping, you just need one day, that one day to have a momentum upward, all right? Okay.
So we are going to show you, we are now showing you the technique. The technique to in and out within a day. So that even in a downtrend, you can catch it. Yes. This is it.
So on a daily chart, this is what you're looking for. Basically, it's a buy and breakout method.
It's a pattern as well.
Yeah. Okay. And it's just that what are the buy and breakout methods? There are so many strategies to do buy and breakout. Okay, so in this example, you see, if you draw a falling wedge here, you can get a breakout. So that means on the daily chart, you just need this kind of candle, just one, for you to trade, buy and sell on that same day. And okay, if you do that, by the end of the day, if you really hold on to it, you'll make 25 cents in profit or 7.25%. Okay, so one whole day is 8 hours.
And this pattern?
Yes.
What's the name of this pattern?
Okay, like I mentioned here, it's a falling wedge. It's actually in this book as well. Yes. So actually this book covers a lot of things in technical analysis, the basics, support resistance, and chart patterns. Okay, coming back to this, this is on the daily chart, right? It can be subjective and all. How to make it sharper, you have to go into the intraday chart. So on the daily chart,
the nuts and bolts.
On the daily chart, this is how it looks like. You enter around here and you sell around here. Okay, that is how it looks like on a daily chart, one candle. But what's happening within the day is actually
the timing of entry.
We don't simply look at a daily chart or there's a breakout, we enter. We have to look at the intraday chart. Okay, look for other breakouts. Okay, so in this example we have here, okay, that's you can call it
symmetrical triangle. Okay, beautiful.
So here,
breaking out.
All right. Here you can see there's a breakout. Okay, then around here when there's a signal, that's when we buy. Okay, and then we sell. Also, it's based on targets, mostly Fibonacci. Mostly Fibonacci is the easiest, simplest, and chart pattern as well. Okay, so what we're doing is trading on the intraday. Okay, but on the daily chart, that's how it looks like. It is as if we're buying on the breakout, selling it at the end of the day.
That's right. Yes. All by just applying technical analysis, which is a branch of forecasting, that rely on just price action and volume action. Just looking at the price and the volume, one can already, determine establish who's in control. Are the buyers in control or the sellers in control? If the buyers are in control, that means demand is greater than supply, and that's price must rise. Right? But if the supply is greater than demand, if the sellers are stronger than the buyers, price must fall. Right? So just looking at the price, whether it is breaking out on the upside or downside, we can get an idea whether to be entering or exiting.
Okay, and then this is another example. All this is in the past. Scalping, kangaroo, you just need one day, all right? That method, that signal is just meant for that day only.
Right, in and out.
Okay, so for this one, we have, what you call this, if anyone knows, it's a bullish flag.
Yeah, you should let them guess, and if they guess correctly, okay. Like Merdeka Day is here, so.
Okay, and then there's a breakout signal there, and then if you take profit at the end of the day, so 13 cents in 8 hours. Okay?
Just within a day.
Yes. Yeah. Again, what's happening in the intraday chart is...
hold on, 3.77. That's quite good money, I would guess, wouldn't it? If every day you do that, I'm assuming that you can do it every day, then 3%, don't say 3.77. In 20 days, it will be like 60%. And if you got $10,000, you will be up by 6K. Isn't that good? 10K, your capital, you go in, you trade, okay, and you make 3%.
And then coming back to this, on the intraday chart, again, what happened is, it's not necessarily the same pattern will appear every time on a daily chart and intraday chart. Okay, we just use the intraday chart for even sharper timing. So this is where we get our buy signal, okay, and make our decisions over there. Our entry price, our target price, stop loss, everything's there. So you see here, this is just a rough estimation where with our method, scalping the Malaysian stock market, we make roughly 3% per stock or per day, depending on the trader. So imagine if you have a capital of 10,000 ringgit, okay? So 3% means you profit 300 ringgit per day. 300 ringgit can buy you nice lunch and dinner already. So since scalping is about making small but frequent and consistent profit, okay? So if you do it for 1 month or 20 days consistently, you can get 6,000 ringgit in profits. Okay. Of course, there are sometimes we earn more than 3%. This is just a rough estimation, but it's good enough already. And then there's this saying, 3% a day can keep the doctors away.
By a lot of people, actually.
Okay. So
if you can make 3%, you get a close shop already, and then can go down with a good friend like you. And let's go and have a cup of coffee, coffee, and then chat about the market and get ready for and hunt for another stock, or even within the same afternoon or the next day. So how nice.
Okay, so the stocks we show you, those are actually past examples, all right? And now we'll show you our the results from our real students. Okay, real results from our students. So this is actually just this morning. Okay, this is one of our best students. All right. So he scalped this. Okay, just within a few minutes he earned 3.39%. Okay.
Wow.
Also from this stock, okay, 1.8%. Okay, and here 3.77%. Okay, so you see, this is why we say 3% only. Because roughly per trade, you buy, sell quickly, and you will get an estimation of 3% profit.
Yeah.
Okay, so you just have to keep doing it consistently. Be very disciplined.
Yes, very disciplined. A very important word there. Not everybody can do it, so don't think it's easy. It's possible, but it's not easy.
Yeah.
Strong technical analysis knowledge, of course, which later on we'll talk about our course that can teach you.
Yeah.
That's very important.
And then, yes.
Discipline.
This is done by one of our best students. He's a guy. But of course, in trading, not just guys are good. Our lady trader students, okay? She's also one of the best students that we have, right? With scalping, she made this at one time, 13.7%. Okay, but this one can be exceptional because she held onto it, carried it until the next day. Okay, she just took the risk. In return, she got 13.7%.
Actually, it's fantastic because the investment is only 8,800, less than 10K.
Right.
And then make 1,002.
And the second one, this is another student of ours, one of the best also, and he's a big player. You see, scalping, you only buy and sell within the day. But I'm sure you've experienced days where certain stocks, they just spike up, right? Whether they close at the end of the day or come back down. The thing is, they spiked up.
They're in and they're out very fast.
So if you ever encounter that kind of situation, you didn't set your target price, okay, you may be lucky like him, 10,000 ringgit profit in the early morning.
No, what he does is after buying, he just key in to sell,
he gained his stop loss. He only decides where to sell later. So maybe he went to the toilet for a while. He came back, then it spikes up. Okay, so he went way above his target. Okay, then he can just take the profit as it is. Then another one here, I think it's back to our lady trader. So scalping also in a soft market where there's not much momentum, you can still make money. So if you see here, within 2.5 hours, 900 ringgit.
This is a good one.
Yes.
Yeah, within just 2 hours.
You just need the right method. So you see downtrend, uptrend, or sideways, scalping, FIFO, the kangaroo technique. It works. Another one, I believe this is also our lady trader.
Yeah.
This is within 12 minutes.
Yeah, it's even better, right?
She just saw a quick momentum. She was satisfied with the profits. Okay, take profit.
Yeah, I noticed there are small players, I mean small players, retail, playing 8,000 shares only.
Yes. So our lady trader is not that big like the first few testimony. But the point here is, with no matter how much capital you have, your technique has to be right. You have to be consistent.
Yeah.
Okay. Other than that is, Yes, another student also 16,000 within the day. Okay, so also again, capital plays a big role. He has huge capital, that's why he was able to make this kind of profit. Okay, but still a profit like our lady trader, small capital, is still very satisfying.
Yeah, that's good. And you have the 3% rule, huh?
Okay, these are some of our recent testimony from our students. Okay, and you know how the market has been, and yet they still made money.
This SFP Tech, yeah?
Yes, this is a new stock, I believe.
Still looks good.
Within 30 minutes, 2.72% profit.
Yeah.
Okay, and then next one here, in less than 1 hour, 4.32%. They just use the kangaroo method.
Yeah.
Scalp the KLSE. All right.
Yeah.
Next, we have Sedania. 7 minutes. 3.04%. Okay.
Yeah, it's all around 3, right? I noticed. Yeah.
Some people, if they can get 3% within 7 minutes on that day, after that they just shut down their computer.
Yeah.
They can do that as well.
Yeah. You can see it's the technique, no? It's the technique of
Technique
going in
is
and
very
out.
important,
That's
yes.
what is the point is that you know, you must have the right technique, you know, and of course money management as well. Right?
Correct. Okay, and then here just to show one more example of a kangaroo stock. This is a new stock also, LGMS. So you see there was a spike here, and then what chart pattern?
What chart pattern?
Yeah.
Yeah. Anyone there who wants to give it a try? No.
Okay.
Okay. No.
So
yeah.
So maybe I'll just tell this is a bullish flag.
Yes.
Okay. It's a small continuation pattern. So you see, we just need this kind of movement in the KLSE. Okay. We just have to be there early, find that stock. Okay, and then we scalp it. So in this one, you can enter at 7.95. This is all example again. Okay, take profit at 82 cents. You make profit of again 3%. 3% is the average.
Yeah.
And this one was made less than 30 minutes. And again, this is not just an example. Our students did it. Okay, 250 ringgit profit. Okay, with a capital of 7.9 thousand ringgit. Okay, so other than swing trading, position trading, we also have scalping method,
which is this, right?
Yes.
It is, yeah.
So the kangaroo.
Right.
So if you want to learn, okay, from zero to hero, we will guide you. Okay, learn it from Mr. Fred himself. Okay.
Well, and you, of course, two of us will be presenting this, you know, for those of you who are really serious,
yes,
and you want to learn, you know, it's definitely optional here, because what we are actually sharing with you is for information purposes only. But if for those of you who, you know, want to do it this way, then where, you know, it's like even in a waterfall market, that rebound, that quick rebound, we can catch it. Then this course is for you. It's not for everybody, right?
Okay. And then the course details it's called Fast In, Fast Out, or FIFO. Right. So the next intake is on the 27th of August. It's a Saturday from 10 a.m. to 1 p.m.
Right.
Okay. The class is only 3 hours, but of course it doesn't mean you master everything within 3 hours. You have 10 preparation videos to watch before you attend the class, because this is where we teach you the basic of technical analysis and the ones you need, like support resistance, trend line, breakout, chart patterns. Yes, you have to know quite a number of chart patterns. Okay, they're all in this book and also in the preparation video.
Yeah.
Okay, and then price is 1,005. Okay,
is that all? You know, this is very reasonable.
Yeah.
I'm considering that 3% a day, you know, you can make 6,000, you know, within 1 month.
Yes, and then if you do plan to learn, please register early. All right, because you need time to digest the content of the video. All right, so that you can come to the class well prepared.
Yeah.
Right, you have time until 27th of August. It's quite close to Merdeka.
Okay, so again, we all celebrate. How many of you celebrate Merdeka here? How many of you are Malaysians? I think most of us are. How many of us? Let's look. Yeah, okay.
I think all quite quiet.
Okay, all very quiet. All right. Okay, so because it is Merdeka, and we all celebrate Merdeka, and so we are looking for something maybe special today. Yeah. So okay lah. Mm, Actually, 1.5 is already reasonable, but because it is Merdeka, in the spirit of Merdeka, I'll give you another 10%.
Ah,
Okay. So that means to say, those of you who sign up, okay, from now until Merdeka Day, yeah, you get another 10%, which is 150 off. So that means, look, 1350, like you've written there, Afnan.
Okay.
So, okay, this is the price that you could pay, okay, for learning this fantastic course, right, which is going to, you know how much money it's going to be able to make you in terms of percentage-wise. Honestly, within a month, you already cover the cost of your investment. So register right now. Okay. And for those of you who can do it within the next 48 hours, if you register with us within the next 48 hours, I'm going to give you some more special within a special. That means you're going to get this book as well. I give you a free book. Okay. My chart pattern analysis book, which is the bestseller in popular bookstore. I'm going to give that to you and even autograph it for you if you can sign up within the next 48 hours. Okay, that's the deal.
Okay.
Otherwise, we're going to go back to just to the end of Merdeka. It's 1,005.
Wow, a good thing the class is in
1,350. I'm sorry about that. Yes.
All right. Okay, so there you have it from Mr. Red. He said it himself. He will give another 10% discount until the class for this August intake. And then those who sign up for within the next 48 hours, you get a free chart pattern book signed by the author himself. Okay, sounds good. Just a sneak peek on the videos, all right? Okay, so you will cover chart construction, basic concept of trend lines, support and resistance, Fibonacci, chart patterns, triangle patterns, and everything. All right. So you see, there's quite a lot.
Quite a lot. Look at that. So it's not that it's easy to make money. Making money is never easy. It's possible, but you really have got to learn it ABC. The knowledge behind it, the theory behind it, which is taught in these 10 pre-recorded videos. So the importance of learning these 10 pre-recorded videos is actually understood, more than understood, that you must have that knowledge. Otherwise, you cannot be a successful trader. Okay, so those 10 preparation videos is what we'll give you in advance, and you go through it, okay, before you come for the 3-hour course. The 3-hour course will show you the SOP. No joke. Is okay, the standard operating procedure, step 1. What you look for?
Just about to get into that.
Okay.
Okay, so in the FIFO course, what you will learn is daily routine as a FIFO trader. You have to know your routine before the market opens, okay, how to prepare to pick the right stocks. And then also you will learn the systematic and rule-based entry and exit strategy. So meaning our FIFO strategy is quite, okay, I would say it's very, very objective. So less subjectivity is better and easier. Okay, so you learn that. Okay, and of course you learn how to pick FIFO stocks, because every day is a different FIFO stock. Different stocks are active. How to screen for those? We have the way. Every day there is a fish for you to pick. In fact, more than one fish, right? So and then and then the rule-based strategy. That's our F1 breakout trading method. Of course, money management you cannot escape no matter what trading style you use. Okay, so you learn all this all in one place, F1 Academy. Other benefits you will get: exclusive access to our Telegram group called F1 FIFO group. This is very important. Yes. Over here is very important because, of course, you still need to touch up on a few things, right, on your knowledge. So in this group, you will no longer trade alone and in isolation. Not just in a group, but it's people with like-minded FIFO traders. They share the same style, the same terms. Okay, so it's easier for you to keep up the market for FIFO Okay, and also for networking.
They will drink coffee with you.
And then
chit
there's
chat the
also
same things with you.
not just analysts, but the students, the past students, experienced one. They'll do live FIFO discussion because as they trade, they also share what they find out today.
Correct.
Yeah. So directly or indirectly, you can use those discussion points for your trades or alerts. Okay. So you'll be independent just like them. So if you're interested, hurry up, register now. You can contact these two numbers.
Mr.
All right.
Cherry and
Mary. Just tell them that you want to sign up for the FIFO course. Okay, so that's all for today. So thank you everyone for joining us. So I hope you learned something useful. So one of the key thing here is Malaysian stocks, you can still scalp. You just need the right method, the right routine.
Right.
Okay, and then now you also know for scalping, you just need that one day to have a rally momentum. Okay. Then other than that, techniques, well, you have to join us to find out.
Yeah. Come and learn from us, okay?
Okay. So, well, I'm Afnan.
And I'm Fred Tam.
So, see you in our class and let's make money together.
In 2015, I wrote a book called Chart Pattern Analysis. And this book is about how a super trader was able to use 11,000 to make 42 million in just 23 months trading stocks. And his name is Dan Zenger. If you want to know how he did it, please look for this book. This is in the popular bookstore up to today. Already 4 years, it is the best seller. I'm also an author of The Power of Japanese Candlestick book. Now, I'm very proud of this book because number one, it is endorsed by my good friend Steve Nissen. Steve Nissen is actually the grandfather of Japanese candlesticks in the whole world. He's the one who introduced Japanese candlesticks to the world. Every day when you look at the screen and the charts, you are looking at Japanese candlesticks. But do you know how it functions? Do you know what are the uses of Japanese candlesticks? Do you know how to construct Japanese candlesticks and interpret Japanese candlesticks? If you don't, this is the perfect book for you. By myself and endorsed by Granddaddy of Japanese Candlesticks, Mr. Steve Nissen.